Hey, hey, hey! Get ready, cause this ain't funny! My name's Wayne McDean and I'm about to make money! Pulled out the euro and aimed it at the sky. Let two fly. Heads went up and people hit the floor. He bought some yen and then he bought some more. Hey, so I guess we're around. Let's go. I drive big cars, everybody knows me. It's like I'm up on the sun late at night. Something ain't right. Just can't get my day trade right. Here we go. Hey, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne. Nice to meet you. Happy holidays. Hey, quadruple witching Friday today. Does it really matter? No, not really. But it's definitely an opportunity for whoever's left in the market to finish what they're doing and go home, spend time with their family. So, cool. Very interesting. So I will do some coaching next week, if you don't mind. Even though really it's pretty much the end of the year. It's not really. I mean... Again, I'm waiting for profit taking, right? And I think we already have profit taking on the way. And in many ways, I've been pretty right this week, huh? Things have been moving my way miraculously. Good thing I've been explaining it to you for weeks and weeks and weeks in advance. So anyways, so as we draw down to the end of the year, it actually gives us opportunity because we know people want to take profit before they go home for the weekend or for the holidays or for taxation or whatever. But we could take advantage of that. So anyways, that's cool. So thank you for being here. Thank you for your loyalty. Thank you for your respect. Thank you for being a subscriber of Forex.Today. Thank you for supporting the community by leaving comments, by doing the thumbs up every day. I hope this is having a positive effect on your trading. And if it is, would you please pay it back to Traders Way? They are bringing this to you, making it possible. So please visit tradersway.com. Open a demo account, then download MT4, and you can make some trades and check out the execution speed. Okay. Bear in mind, the live server is even faster than the demo. Okay. Check out the spreads. Check out the swaps. If you need, contact customer service. White glove, butler type service. And then when you're ready to trade real money, we hope that you choose Traders Way as the prime broker to your successful Forex trading business. Nice, right? Complete package, all in one. So, your way at Traders Way with Traders Wayne. Ask questions today. I think we'll go over the yens, the dollars, the golds, the oils, and I don't know, whatever you want. I don't have a lot of time today. So, last week I spent a lot of time restructuring Goldman Sachs. This week, I am creating a strategic plan for the Walmart of Mexico, and I got to get her done by midnight tonight. So, and then I'm free to do what I want. Another semester in the books. Yeah, just give me the A, moveon.com. So anyways, we'll see what happens. We'll see what happens. And I did on my other class, I didn't do well on my final. I got the grade, and I'm like, really? I'm an A student, right? And I didn't get an A grade. And so I'm looking at the feedback, and you're like, oh, no, well, in this case, we don't count this as, cost of capital. This is like cost of equity of capital. And it's like, oh, in this case, you wouldn't depreciate this thing, and you would, oh my God. I'm not an accountant. Let's just put it that way. But you know what I hate? I hate when you do an exam. And you do math, and I do this big, giant formula. And I showed my wife, I'm like, look at this Excel spreadsheet. It's beautiful. This is something to be proud of. I should get extra grades just because my work is so beautiful and easy to read, right? So I do all the spreadsheet, this, formula, this, of that, and that, this, and it's all nice and beautiful and complicated and logical and all that kind of stuff. And it spits out an answer. $77,388, right? And then I look at my choices of answers, $77,388. So do you think I'm correct? Like, hell yeah, nail this, boom. 3 points, nothing but net, right? Answer, wrong. I'm like, what? Damn you, Harvard. Oh, what a sucker punch to throw out. They know the mistake that I made before I made the mistake and threw down the answer if I was going to do it incorrectly. You know what I mean? If I was going to do it incorrectly, I'd do it that way. And they're like, oh yeah, this guy's going to come out with 77,388. So we'll put that there. Son of a, you know what I mean? You know what I mean? Like, don't you hate exams like that? Like, oh, if you just would have had it, if my, oh, I would have, oh. So hopefully I didn't throw away my A. Oh, final exams. Sucks. Anyways. So I got one more thing. All right. So I don't have a lot of time today. I think a lot of people would have called in sick today. But I love you. You are my sweet baby, and I want you to succeed. And I don't quit ever. 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 So anyways, let's go through this. Okay. What are we looking at? I guess where we left off, pivots, yens. Okay, these look like daily bearish trade plans. Okay, so let me fire up my drawing tool. Where is it? Epic pen. Come on, Epic pen. Epic pen, where did you go? There. Boy, it's slow for a pen. All right, you guys with me? Yen, how low can you go? Yeah. You guys with me? Hello? Got my pen? Yeah, okay, cool. All right, so things that you would know about me. One, I'm a bear for not for fundamental reasons, not for technical reasons, but based on seasonality. Cool. And we know that these are daily trade plans. You can tell by this is the new tool that I'm playing with. So we know I'm only looking for bearishness, and we know we want to sell at the pink zones, right? Which are just daily pivot sell zones. Cool. So let's take a look at the opportunities, because I did it now, 3 days in a row, so I think you're probably on the clue train. So let's take a look. Okay. CAD yen fell hard yesterday, came back to the sell zone. Seems pretty plausible you could have taken a shot. Euro yen was way down here. Look at this, guys. Can you see it? What does it say right there? It says bearish, take profit zone. What? Look it even told you where to get out. Look at the accuracy. Doesn't always work that good, but that looks good. So anyways, back up into here, and there's the sell. You could be short, right? Down, down, down yesterday, back up to here. There's your sell zone. You could be short. Okay? Down, 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 up, up, up. Really faded in Asia, but very quickly back into the respect. You could be short there. And then this one, nope. Nope. No trade there. Pretty nice though, right? So let's zoom in on like Euro. So let's do a quick review. We talked about this being big resistance. We talked about this being the second chance. So there's the actual entry. Then the next day, down, 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 up, up, sell, which we did. So there's the second trade. Down, 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 down. So yesterday you should have shorted here for your third trade. And there's Mondays. You see this? So I did this one for you. I did this one for you. And you can see clearly there was a trade here. Clearly, your monkey's uncle. Okay. Okay. You see what I mean? Are you getting the methodology? Have I drilled it home? It's been sort of the message of the week. Clearly a sell, clearly a sell, clearly a sell. These are just day trades, okay? And then, of course, we have to say it just because it's also part of the education. We had talked about this, doing this particular week 8 months ago. 8 months ago, we said this time of year, it would be rolling over this way. So that I'm gonna like, obviously I'm gonna see what I want to see, but this was predicted well in advance before it fell, right? I'm not responding to a pivot point per se. I'm not responding to a technical pattern per se. I'm not even responding to fundamentals. This was predicted based on seasonality alone, not fundamentals, not technicals, all before it happened. Now, it could be amazing coincidence, and it could be just luck, but it happened. I bet you for a minute there, you probably thought, oh, he's wrong after this, right? Right? You thought about it, didn't you? You're like, boom, oh man, this guy's buying Japanese yen, right? He's selling yen pairs, and this thing popping. Right? So I bet you, no, I shouldn't say I bet you, but I wouldn't be surprised if some of you in the back of your head thought, oh, he's wrong in this one, dude. I think he messed up, right? The streak has ended, right? The streak has ended. There's no way. Oh man, he's wrong in this one. And look how hard and fast. So what's happening here to make it such a hard and fast change of direction? These traders taking profit going home. That's the human nature of the markets. It's not fundamental, it's not technical. It's human nature. Look at this, guys. Obvious. Okay? Obvious. This is where you're supposed to take profit 100% of the time. Look how obvious that clearly traders that know what they're doing did what they were supposed to do without a shadow of a doubt. I got out a week early to be safe. There's 52 weeks in a year. I got out a week early because many of the yen pairs started December exactly at M3, dropped like 100 pips each. So it rallied back up and I took profit right near these M3s because that could have been the top two. We also know, like, it's either going to be M3 or R2 basically, right? M3 or M4, right? Basically, right? M3 or M4, right? Like we know like that's likely to be the top. And so when I see a drop of 100 pips off an M3 and I'm a bull and I expect a full reversal very, very soon, like an imminent reversal, oh, I look at a 100 pip drop off MM3 as holy snickerschnocker. That could be it. That might be it. It probably would be it. So anyway, so I took out the full profit. Then she jumped for a week and now is completely reversed. Cool. Well, I didn't want to risk the obvious because it might pop up to the next level first. Over the course of a year, nobody cares. Right? You understand? I've talked about this quite a bit where like at the end of the year, nobody knows. Your clients don't know that it went 100 pips higher before it totally collapsed. All they know is you got out, you were long for 4 months, and then all of a sudden, right near the turn, you were short, making money both ways. And they're like, oh, you're a really good trader. And you're like, I know, huh? That's my American accent. I've been working on it. Okay? Been working on it. Cool. So, yeah, we got that one right. Yay! Cool. CAD, how are we doing on this one? Let's see. Short here. Down, 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 up, up. Can you see? You should be short here. If you just did what I've been teaching you the last 3-4 days, you'd be short there. Right? Pure mathematics, by definition, hedging doesn't make any money. Max, it's US GDP, but it's a revision, so nobody cares. We already know. It's just a revision. And besides, GDP is important, let's say, for fundamental analysis, because it's so backward looking, like what happened 4 months ago. Like, who cares what happened 4 months ago? We're more interested as traders is what's going to happen in 4 months. So this is, you know, GDP is important for fundamental models, right? Will the Fed raise interest rates or lower interest rates? That's what we're trying to ask, right? And a falling GDP would probably get the Fed to consider stimulating the economy. And the fact we think the Fed is stimulating the economy or should stimulate the economy would then put us into a trade. But like GDP coming out today, revision GDP might create some volatility today, but otherwise is meaningless. Okay, you see what I mean? Like, I don't care. I don't care. We can watch it, but dude, like, this is what I'm teaching you guys to do. This is what makes you money. So like if GDP comes out and goes, and then it'll just do what it was doing anyways, right? So we're not scalping GDP revisions and stuff. And you got to remember too, maybe it's just I'm old school, right? GDP, let's say if it was a surprise, like 15 years ago, the market would pop, let's say 200 pips. And therefore I could trade that volatility, right? Now what's going to happen today when it comes out? Is it going to move 30 pips? Maybe. So to me, like, is that even a scalp? Right? Like, what is that? Right? So, right? So like, right? So this is what we're interested in, is this nice stuff. And it's bigger than second number, right? Anyways. So cool. You should be short there. I hope you appreciate that. And yeah, cool. Well, Ed, again, it's not necessarily the GDP number. It's the response of the central bank to the GDP number, what their response would be, and the differential between the economies. Okay? So if you thought Europe was going to stimulate their economy, like, let's say, let's make it really simple. Let's say you thought Europe was going to cut interest rates and the UK was going to raise interest rates. Okay? Now you got yourself a trade. And so how do you make that determination? Productivity through GDP, inflation through CPI, right? Are two major ones. Okay? And maybe throw in jobs. So you look at their job report, look at their inflation data, and look at productivity through GDP. And those three things would probably be enough. No, no, GDP is GDP. There's no basket. Okay? You can calculate GDP by basically, like, for example, the money I spend. So let's say I go to the store today and I drop $1,000 on Christmas. That is somebody else's wages. That money I put forward goes to other people. It goes to other things. Eventually, it goes to the factory. It goes to the factory worker. It goes to the hairdresser that cuts the hair of the factory worker who works in the factory that made the thing for me. You know, and maybe it goes to the coal miner. It goes to the corn farmer. You know, my spending is GDP. Okay, because it goes all the way through the economy. So, you know, that productivity is not a basket. GDP is all productivity, all domestic productivity. Okay? So, Daniel gets knocked out of break even a lot. Okay, cool. So, let's do this. If your break-even trades are good, it's preventing you from losing tons of money. If your stop loss break-even trades are bad, you're preventing yourself from making money. So if you break even, it's not enough information, right, Daniel? You're either getting knocked out of good trades or you're getting knocked out of bad trades. So we need to identify which one is which. Okay? So, start trading with 2 accounts. So get 2 demo accounts from Trader's Way. Okay? When you decide you got a good opportunity to trade, take the trade on both platforms. So you're going to have 2 sets of charts. Or just make 2 trades and manage them independently. Whatever works best for you. So let's say you want to sell. Now you go sell, sell. So now you got 2 trades. And then have 1 stop where you would want to put it. Okay? Because, like, for example, I don't think I've ever taught someone to put it at 100% retracement. I don't think I've ever taught anybody that. So I don't know where you got that, but that's what you want. Okay, cool. So put that there. And now put the other trade 100 pips away. The stop is 100 pips away. Okay? Once you make the trade that you put the stop wherever you want, when you want to move your stop, move your stop. If you want to lock in profit, move in profit. Okay? But the other trade, don't touch it. Now, let's talk about limits. Let's do this. Let's put your limit at 25 pips. If that's too close, make it 33. Make it 50. Okay? So let's say it's 30. Okay? 33. Let's do it this way. On your test trade, your stop is 99 pips away. Your limit order is 33 pips. So you're going to do a 99.33. And you're going to say, well, Wayne, the risk-reward rate, don't get into that. Just listen to me. We're not testing risk-reward ratio and profitability. We're trying to figure out whether your trade plans suck. See, if your trade plans suck and you get knocked out of break even, then the best part of your trade planning is your stop, your risk management. You're not losing any money even though all your trades suck. That's pretty good. Okay? So I'm only trying to figure out if that's your issue. Your stop's too close. So let's do a 99 pip stop, 33 pip limit. Okay? For that, you probably use an OCO. So that would look something like, let's do this one. Okay, we'll do CAD yen here. So in this one, you'd have to turn on your auto trading. You'd have to open this up. You would go to, what the heck is it called? It's not OCO. I guess it's just auto stop, isn't it? So I got to drag it to that chart. And my take profit would be 33. And your stop is 99. The reason I put the stop so far away is I want you to be really, really, really wrong. I don't want luck to play a part of this. Okay? I don't want, if I want you to wrong, I want to know if you're really wrong. You're buying when you should be selling. This is what I'm trying to figure out. You're selling when the whole planet is buying. Like, what's wrong with you, right? Well, we don't know. So here we go. I got an auto stop here. So if I sell it, my stop's going to be way up high, and my target is going to be a reasonable, like intraday type trade, 33 pip profit. Now, what I want you to look at, no, it has nothing to do with it. Plus, it's a demo pro trader. Okay? Remember, focus on the objective. We're not trying to make money. I'm trying to find out why Daniel breaks even. Is it good? Is it bad? I don't know. How would I know? So, I don't want luck to play a role in this. Okay? So, here's the thing. In your first trade, manage it any way you want. In the test trade, manage it the way I tell you. 99 pip stop, 33 pip limit. Okay? And you're not allowed to manage the risk. Because at the end of this testing period, let's say, I don't know, 20 trades, I want to know how many times you went negative 100 and how many times you hit positive 33. Okay? Now here's the thing. After 20 trades, if the majority of your trades get knocked out at negative 99, you lose most of the time 99 pips on your trades, then your current risk management's pretty good because your trades suck. Your trade planning sucks. You lose 100 pips every time you buy, or most of the time when you buy, or you lose 100 pips most of the time you sell. Your trade plan just sucks. And the thing is, we'll work on the trade planning part. But we don't know right now. You break even. I don't know what you're doing wrong. Okay? Now, if most of the time you hit plus 33, then now we know you're not you're mismanaging your risk management, right? Your stops are too close, you move them too quickly. So we will figure that out. You understand? Now, instead of working on your trade plans, we don't have to worry about that because we're golden. We know, like, oh, you have really good trade planning skills, bro. You should feel comfortable in that. So instead, let's work on where should your stop go if not where you're currently putting it? Or is the issue that you're moving it too quickly? And now we can start testing with scientific methodology based on your trading skills where the appropriate stop should be and when you should move it. You understand? We're isolating the problem. But if you don't know your strengths and weaknesses, you're not going to get better, right? So we need to identify how good your trade plans are first. And if they're solid, right? Oh, look at all the money I'm making. So if you're solid on the trade planning, we'll fix the other stuff. See you, Wade. Oh, baby, I love you, Wade. All right, check that out, huh? Making money, honey. Oh, so nice, so nice. Making the money. Well, Ed, I think it's more dangerous than that, but I know what you're saying, Ed. He says it's like free falling and you're pulling the chute too early. The worrisome part of this, because it's bigger than that. I don't know if you open your parachute too early, if it really matters. You just float longer, right? But it's more like an astronaut re-entering the Earth's atmosphere, but you're worried about coming in too steep because you'll burn up like an asteroid. So instead, you come in shallow. But the fear makes you come in so shallow, you skip off the atmosphere and you float in space for eternity because you missed the entire Earth. You had a good opportunity to land, but so to me, it's that important because you might be in really good trades, right? Like Daniel might be in really good trades worth 100 pips each, but instead, out of fear, never makes any money. No, I know. I know what you're saying. I know. I agree. But I think it's even more dangerous than that, right? Because what will happen is if Daniel can't figure out the strengths and weaknesses, Daniel will start changing the wrong things. I don't want you to change the good things. I want you to adjust the poorly executed part of the trade planning, right? So I want you to do that through scientific methodology. Yeah, Jimbo, I used to do that, and I'll probably do it again. So maybe in the new year. Okay. But that would be like for Live FX Boot Camp. So check it out, guys. Wow. Yen strength across the board. Woo-wee. Look at that pound yen. Nice, huh? Right at the London Open. You see what we've been talking about? Huge move down yesterday. What do we call the blue arrow here? Okay. Asian fade. So if yesterday was down, today's probably down too. Kind of like the weather. It's not necessarily that way, but okay. Check that out. Just beautiful trades, man. Okay. Yeah, pound yen went down, but I told you guys. I mean, none of this is a surprise, right? None of it. None of it. Cool. I'm just happy by making these like radical predictions, right? Radical predictions. I don't think I have any egg on my face this year where I just look ridiculous. I think every ridiculous prediction I made this year through the whole year of 2019 has been pretty accurate. I'm pretty happy. So check this out. Here's the indicator I had programmed for us. And it says right in here is your first sell zone. And if you sell, here's your take profit for the day. Bearish profit zone. Isn't that neat? All right, AMFX says it's the CAD news that moved the yen. Sorta. Again, I want you guys to think bigger. It's not CAD news. I mean, CAD news was there and it's important per se. It's Friday before Christmas. People are looking to get out and go home. It's quadruple witching. Options are expiring. Contracts are expiring. Like trades are expiring. People are going to just take their profit and go home. So if the news comes out and like the CAD news and whatever, it's like, I mean, it's just another opportunity to get out of a trade, guys. Sometimes I think you're thinking about like today is just like every other day. No, it's not. No, it's not. People are not looking to take new risk, right? Most like institutional players in the market that control prices, they're not putting on new risk right now. Do you understand that? They're not like, hey man, let's throw down another $1 billion trade. No. These people want to go home early today. There's probably holiday parties they're going to go to this evening at their friend's house, and they're going to drink, bourbon and eggnog, and and they have gift exchanges for the office, and this is the stuff that's going on. They're not sitting in their kitchen trading on their laptop, right? So they're like winding down, bro. So every little piece of news is another opportunity to get out. Then they're going to come back next year. And then they're going to have, business planning retreats with their team and staff and strategy meetings. And all right, so what's the big 2020? Like, oh, well, we think the economy is going to go up all the way into the fall, but then we'll probably stall out in October in regards to the election. And then, even though Trump's been impeached, his presidential approval rating is actually at least average for a president, maybe even a little bit above average, which means Biden or Warren or whoever's going to run against him at the very end doesn't have enough juice to beat a standing president. Maybe if his approval rating was 20, but it's like 47. So like, all right, this impeachment stuff, it's just not enough. And the Democrats don't have anyone strong enough. So they're like, it doesn't, right? So then you can put that, if that's your interpretation, then you can say, well, then Trump's going to get reelected despite all the bad, press that's going to happen for the next 9 months or whatever. But Trump will get reelected. The stock market's going to rally one more time. It's going to get another Trump bump. Not because everyone loves Trump, but because we already know what to expect from Trump. And all the policies are already in place. And we don't have to wonder what's the new policy from the new president? And who are they going to put in their cabinet? And all this kind of stuff. What laws are you going to change? We don't have to worry about that. So we're just like, oh, it's game on, another 4 years. Boom, off we go, right? But if there's a new cabinet and a new president, especially if it's Warren, right, stock market's coming down, U.S. dollar is going to get ridiculously strong and all this kind of stuff. And, everything changes because of the risk and the monetary or the economic policies of that new White House. And whoa, right? So we have to incorporate all this into our planning. And then what's going to happen? Traders going to come back to the market and start trading. When? Oh, I don't know, third week of January. But I already have this planned. I have every step of this already planned. Okay? Because I'm ridiculous. I'm ridiculous. I thanked Ryan today for being ridiculous. I said, hey, thanks for being a good leader to the FX Bootcamp community and teaching them how to be ridiculous. Like us. I love being ridiculous. You don't have to work with my indicators. Free country. And by the way, indicators don't make my trades, right? So whatever. Yeah. This can yet? No, this is nothing, dude. This is stupid. This is just boring. Look, I'll show you how boring this trade is. There's nothing to it. Okay. I sold it off the M4. Yeah, done. There's the weekly, monthly. So you have to understand we had a weekly, monthly cluster. So let me put it in different terms. I'll put it this way and under the confluence. I said somewhere between R1 and M4. Dude, it's not complicated. Okay. Let's look at the basic facts of trading, right? Let's look at a bullish swing trade. Swing trading 101. Right? Amateur hour. That's a buy pivot. If you bought it there, you exit here. Cool. So I look at this and I say bulls are bullish. They did what they were supposed to do, so I know that they're going to continue to do that. So if you're supposed to buy here, then you're going to exit here. I know it. I know the future because I know these people did something logical. So if they're going to logically get in here, they're going to logically get out here. Plus, I have the seasonality bias that tells me during this week and this week. Okay? Right? Most likely, all the yen pairs are going to do this. Now, how many people, without a shadow of a doubt, heard me talk about months and months and months ago, December 12th as being the key? In fact, you might say, well, Wayne, that's the UK election. That's obvious. Let me preface this. I said December 12th way before that election was scheduled. Months and months and months and months and months before that election was ever scheduled. Because to me, it had to do with December 11th, which was the last Fed meeting of the year. So the way I think is all the professional traders are going to stick around, catch the Fed meeting, do the rebalancing of their portfolios, and then disappear. And I described that to you so many times, you absolutely know that. You absolutely 100% know that. So let's take a look. December 12th is here. So I said, after that, I expect the yen pairs to fall. Boom. That's this week, bro. So like, am I going to miss this? No. There's no way I'm going to miss that. I told you 47 weeks ago that that would happen. Sounds stupid. Sounds just absolutely stupid for me to say that. Oh, 47 weeks ago. But it's true. That's the weirdest thing. 47, 37, 27 weeks ago, 17 weeks ago, 7 weeks ago. Okay? All planned out. Not going to miss that. Yeah, it says, yeah, so much. Yeah, I didn't even have to write it down. Yeah. Your R1, your weekly R1, you might be, if you're not using Trader's Way, then your MT4 server is probably on a different time zone. Or you're using a different indicator. Thank you, AMFX. I prefer cigars and wine, but yeah, thumbs up's cool too. Yeah. Actually, I have so many cigars, it's ridiculous. I have so many rare cigars. I have a humidor that's 4 feet tall, and I can't fit any more cigars in it. So send me wine and bourbon. Yeah, cigars give you cancer. So does air, water, food, shampoo. But thank you. I appreciate that. Yeah, Michael. So I wanted to make the point that this is behavioral finance. This is not your right. It's like some people struggle with economics, specifically macroeconomics, and how that leads to central policy and central banking policy and monetary policy. And so it takes a while to learn that, right? You take the training course, maybe even take a college course, whatever. And then you're also spending a few years getting good at technical analysis. Now, luckily, I teach you how, but you can do all kinds of other things. You can spend the next 2 years doing Elliott wave if you want. You'll be successful. That's fine. Okay? Whatever, man. It doesn't, that part doesn't matter either. Excuse me. But what I'm teaching you very often is a form of behavioral finance. I think much of the world works because it's regular people like you and me making logical but sometimes emotional decisions. A trader's way is an ECN, but I prefer spreads. I prefer soft dollars over hard dollars. Yeah, Ed says economics is easier in advance. Yeah, and it's a social science is really what it is. So you have to understand that even when you do economics, it's a social science. What would someone do here? What would a person do there? What's in their best interest? Behavioral finance says people are not logical. They're not intelligent. They don't make decisions based on their best interest. They make decisions out of greed and fear and arrogance. So you have to combine that, right? So, right, as Stephen says, humans are predictable. That's what I'm teaching you is really behavioral finance. So at first you're going to learn technical analysis. Then you're going to learn fundamental analysis. And then I will teach you, things like about, annual cycles, business cycles, economic cycles, political cycles, and, use sort of that emotional intelligence in our trading. That's right, Javier. TBM says, there was a front run on the CAD yen. How do you make a decision to stay in or reverse? I'm going to stay in for 5 weeks. And that's another thing. I told you all of this and why. I'm going to stay short this CAD yen. Well, actually, I got to move this. This automatically went down there, I think, on an OCO. Let's get rid of that. I want to stay short till the 3rd week of January, at least. Right, so economists teach on rational behavior, but what I'm saying is I lean towards behavioral finance, which say things like humans are irrational. Okay. All right. I think let's just burn through some gold and oil, and I gotta go. I gotta finish the strategic plan for the Walmart of Mexico. Let's take a look at euro dollar just because we gotta. Okay. Again, December 12th is currently the top of our market. Down, 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 down. Now, what we were looking for is yen strength, Swissy strength, and typically dollar strength. And since the 12th, dollar has beaten euro day after day after day and is currently doing something like that. Cool. Right on. Cool. You're welcome. Next. All right, let's look at gold and oil. Okay. This is the giant sucking sound of gold. Okay. And it's still technically on this smaller time frame, bearish. Okay. Which means the dollar is stronger than gold. Now you're saying, well, this is rising. well, yeah, on a smaller time frame. Okay. So it may turn over soon. In fact, we're at Monday's selling pivot. Okay. Notice how we look how wide these pivots are this week. And then look out, right? Now they're narrow, right? Inside the previous top, because that's where that one is. Now this one's even closer. This one's inside. This one's slightly outside. And now inside again. We're losing volume and volatility. No, it's not actually Walmart in Mexico. It's the Mexican Walmart. It's not Walmart. Okay. But thank you. Well, Michael says, can I follow up with the discussion we had about gold being at the central pivot point not being important? What I mean, and let's say it differently then, what I mean is I'm a trend trader. I'm looking for that, or I'm looking for this. What I'm not looking for is this. So that, right? The moves typically happen at the beginning of the month. So if we're at the middle or 3/4 of the month and we still haven't even done a swing, then it's sideways and I'm not interested. I'm a trend trader, I'm not a range trader. I can be a range trader, but it's not enough money to be, my time's too expensive. So let's change WTI then and look at it from a monthly point of view. Okay, let me show you how to do this. There we go. Why is this glitchy? There we go. All right, let's do this. You ready? Near the beginning of the month, you already know you're a bull or a bear. I'm a bull. Right? How many people here know I'm a bull on oil? And specifically, since we were at $50 a barrel, but also on top of that, because of the cuts from OPEC, and I drew out the charts, so an exogenous supply shock, and I moved the supply curve to the left, and that raised up price. Like, it's just right. You just know it, right? Cool. So, you ready for this? On the very first day of the month, buy. There's nothing else to it. It's not any more difficult than that. And if you know me, you know that's true. Cool. With that in mind, my target is up here. Done. That took me about 4 seconds of planning. And on the first day of the month, I ain't going to miss. Cool. So how would I feel if 3 weeks later go by and I'm still here? That this is what happened. Am I looking to get in? No, not for a year, for a month. Pro trader, for a month. That's monthly pivots. Okay? Yeah. Yeah, I'm not interested in this. This is a death trap. I'm a trend trader. I do this all day. Right? I've been teaching daily swing trading, weekly swing trading, monthly swing trading. So, right? That means we're either doing this or we're doing this, but this whole sideways nonsense, I'm not interested in. I just move on. Done. MoveOn.com. Hoodoo? I'm not going to tell you, but I have explained it 100 times for everything this time of year. Most institutional investors are not adding to risk. So what's typically happening, especially if you have a wealth manager, okay, they rebalance. Institutional investors rebalance at the end of the year because of what's in their disclosure document and for taxation, right? For tax shield purposes. Wash sales and deferring taxes. So you have to think beyond that and figure out what that means. Okay? And you'll be grateful to have the knowledge. I'm not just going to tell you. All right. You have to, you're going to have to figure that out. All right. I think I'm done. I got to go. This is a very important day. This is my last day of school this semester. I will probably work till 11:59 and hit submit. Right? Instead of working 6 or 7 or 8 hours last night on this, I spent time with my family. With the heavy burden of this, final last assignment. But I love my family. I love my wife. I love my children. And I'm like, they're just more important. They're just more important. So anyway, so now I have to haul ass today and get probably a week's worth of work done in the next 18 hours. My wife said, how do you feel about it? Like, we're having breakfast this morning. She's like, how do you feel about it? I'm like, I'm capable of this. I got this. Cool. So thank you very much. Have a wonderful weekend. I will probably do a webinar Monday and Tuesday and Wednesday. So if I don't see you, if you go away on vacay, then, happy holidays. I hope you have a wonderful time with your family. And hopefully I see you before the end of the year. But if you're around, I'm going to be around. I won't do Christmas Day or Boxing Day because the markets are closed. But I will be here. If you're here, it'd be great to spend time with you next week. Okay? So I know I say it a lot, but I want to make sure you hear me. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being in my life. Thank you for being on my team. And thank you for your commitment to making this community great every day. Thank you.